I'm definitely surprised by how strong this market has been. And good morning, by the way. Happy to be back on the show, and thank you for having me. From my perspective, I just put out a piece, Brian. I called it, is this going to be a breakout or is this going to be a fake out? Okay, and I'm kind of growing a little bit more concerned. There's a lot of good things that are happening in this market. Economy is clearly chugging along nicely. The unemployment rate is very low at this point in time. We're seeing some wage increases happening, but a lot of good news looks to me to be already sort of getting baked into this tape. And here's specifically what I'm watching. We're seeing the popular averages break out the new highs, but when you start looking below the surface, you start noticing that the number of stocks from very simple metrics like, are you above or below a rising or falling 200-day moving average? Those are not expanding at this point in time, Brian. They've actually been contracting for the last several months. And as I look at these new highs, we're happening with less participation or non-confirmation than what we had seen back in the January timeframe. And Brian, the last time that I saw this kind of activity happening was back in 2006 and 2007. So while things are great right now and the party is clearly on, I think you got to be careful that we don't get too carried away. And it feels like to me, from a sentiment perspective, we're getting some FOMO starting to build up in this market, the fear of missing out. And when we get to those phases, that's where I want to kind of pull back a little bit and wait for this market to come back to me, which I think it probably will between now and the end of the year.
You Vikings fans, I thought you had FOMCA, fear of missing kicks, but that's a football story. So I want to write the headline and tell me, Craig, if this headline would be accurate. We don't want to be fake news, okay? Which is this: man who called market rally now thinking rally is overdone. Correct?
Correct. And Brian, let me add to this. We've got this midterm election coming up.
Heard about it.
One of the things that we've heard about it. And one of the things that I'm observing at this point is we are not even close to the normal seasonal pattern for midterm elections going back to 1928. We should normally be strong up until about the May timeframe, and then you're weak from May to about September, October. Right now, we're about 14–15% above that normal seasonality trend for midterm election years. So to me, it feels like a lot of people are taking the attitude, hey, don't worry, Trump is in the White House, everything is great. Again, not to make this political, but everything is going to be great going forward. No need to worry. Raise your price targets. Here you go. And my answer is, usually history tends to rhyme. It may not repeat. And right now, it's clearly not even rhyming.
You know, Craig,
so this is like a...
Okay, fair enough. I hear you, buddy. I hear you, buddy. Here's the thing, though. September, historically, the worst market or worst month for the market. Today, we're up, we're hitting new records. I mean, so the September historical trend blown out of the water. There's nothing normal about this administration, not in a good or a bad way. It's simply abnormal. Longtime Democrat who's now a Republican president who's, different. We'll just put it that way. We've got ETFs and passive investing to a level at which we have never had. How good do you think history is as any kind of guide?
Well, I think, again, things are going to change. Companies will change, management teams will change. But Brian, the psychology of this market never changes. Fear, greed still always plays out. And whether it's going to be an ETF instrument or an individual stock, I will just simply say that when people look at their statements and they're moving up and they go to the cocktail party or they go to the Vikings game and they're talking about their investments, you're entering that kind of FOMO phase. And then when nobody wants to talk about stocks, you're getting pretty close to the washed out. That doesn't change over time, regardless of the vehicle, from my perspective. And when I look at this market and I'm seeing less participation, and in our work, I've got about 50 and change % of stocks in our work in an uptrend at this point in time. So it's really a handful of stocks, Brian, that continues to push this tape up.
Is it panic?
Which makes me a little bit nervous.
So is it panic buying, or is it the opposite of that because it's just a couple of donkeys pulling the entire market cart?
Well, I don't know if it's panic buying yet. Okay,
Craig, China's up 2.5% this morning. Japan is up 7% this month. Europe is soaring. I mean, everything's in the green.
Everything is in the green, and everybody's saying, wow, everything has gone great. All these negative concerns, nothing is seemingly to lean on this market. And I say, when I see that kind of activity, I get a little bit more cautious. Brian, if you go back and you look at the very long-term chart of the Shanghai Composite, going all the way back to 1996, we are at a point in time. By the way, the Shanghai Composite has gotten to be down over 25, 26% from the highs just this year alone. And now we're challenging that long-term uptrend support line since 96. A break below that would suggest a whole nother leg lower.